we're still in the midst of incredibly low mortgage rates. Plus, we're at the beginning of, I think, the millennials beginning to form families and buy more homes, which we haven't necessarily seen. So we're very optimistic about our mortgage business.
That was Wells Fargo CEO and President Tim Sloan in an exclusive interview with Maria, weighing in on the housing market. This, of course, coming as mortgage rates are on the rise. Joining us now in a Fox Business exclusive, the CEO and President of Fannie Mae, Tim Mayopoulos. Good to see you, Tim. What are you seeing amidst this rising rate environment?
Well, we're seeing the market being, the housing market being strong. We're seeing a lot of home price appreciation. We're also seeing rents going up. And the unfortunate part is that the greatest challenge in housing now is not home price appreciation, but really affordability for families. It's very difficult because rents and home prices are increasing at a faster rate than wages are.
Hey, Tim, it's Mike Murphy. We run a venture capital fund here in New York City, and I'm wondering how your business is using technology to make it that much easier for the people as rates are going up and as prices of homes and apartments are going up. How's technology impacting your business to help the consumer?
It's a great question. You know, while affordability is the greatest challenge in housing, I think technology and innovation is the greatest opportunity. We've been spending an enormous amount of our time and energy focused on how to bring technology to housing finance to make it faster, easier, simpler, less expensive, and in the end, much safer for consumers and lenders and for the overall market, and also at the same time protect taxpayers. So I think there's an enormous opportunity there. We've really looked to digitize the entire mortgage process so that we get all the information digitally and that we're able to verify borrower income, borrower assets, the value of the property, and then use that same information to manage the risk that we take on, and then take that information and use it to distribute that risk out to private capital. So I think technology is a very big part of the future of housing finance.
Everything's a rocket loan now, I guess. Tim, Jerry Willis here. Quickly, I know you've got a big piece of the apartment market. And in fact, I read recently that there's some 69% of that market was held by Fannie and Freddie right before the financial crisis. Now it's 60%. Is that possibly a problem going forward?
Well, look, I think our view is that we shouldn't be deciding whether people own homes or whether they rent homes. Our job is to make sure that people have access to good housing, whether it's housing that they own or housing that they rent. And I think that the challenge here is that a lot of people, whether they're nurses or teachers or firefighters, they don't have access to good, affordable housing that they can pay for every month. So a big part of what we're focused on is making sure that the rental properties that we're financing are those that serve that workforce housing need. That's the key to us, and it's not just in big cities, but it's in smaller communities all over the country.
Treasury Secretary Steve Mnuchin hinted at privatizing Fannie Mae and Freddie Mac. Take a listen to what he told Maria.
It is something that I am very focused on. I think it's unlikely that this gets done in this Congress, but this is something we're very focused on. I am determined that we have a fix to the GSEs and that we don't leave them in conservatorship for the rest of the time.
So when you mean a fix, in other words, they will be publicly held again?
Again, I'm not going to comment on what the form is. What I would say is I think that having a government guarantee on a 30-year mortgage is important for liquidity in the markets.
Tim, your reaction to that?
Well, look, I think housing finance reform as a legislative matter has been pretty elusive for policymakers, so there's a lot of debate and that continues, and that's not something that we control or try to influence. But I think the good news is that the starting point for that discussion today, 10 years after the crisis, is very different than it was 10 years ago. There's been enormous amounts of reform that have already occurred that have been led by the Treasury Department and by our regulator, the Federal Housing Finance Agency, working with us and with Freddie Mac. And so we've imposed sustainable credit standards. We're enforcing those standards. We've changed our business model, make it much more stable and reliable.
Tim, we've got to run. I apologize for cutting you off. Tim Mayopoulos.